Welcome to Earnings Recap. Today we're covering Cisco's earnings report and call. And kicking things off with a jolt. Cisco snagged over $600 million in AI infrastructure orders from their biggest web-scale customers this quarter.
Wow.
That's right, they've already crushed their $1 billion target for the entire fiscal year, with a whole quarter still to go.
That early achievement, it really tells a story, doesn't it, about the intense demand for AI infrastructure right now.
Exactly. Especially from those, internet giants.
Yeah, it highlights how quickly the AI landscape is evolving and, well, the significant investments being made at the very top levels.
Spot on. And that's really just the tip of the iceberg. This deep dive is your shortcut to understanding what's driving Cisco right now. We've dug through the official press release and the earnings call transcript.
Right.
To bring you the most important insights in, plain English.
Our goal is simple. Give you a clear picture of how Cisco performed, what they expect moving forward, and the crucial strategic moves they're making.
Yeah, how they're capitalizing on the current market dynamics.
Exactly. We'll focus on the so what without getting bogged down in overly technical details.
All right, let's dive into the financials then.
Yeah.
Starting with revenue.
Okay.
In the third quarter of fiscal year 2025, Cisco brought in $14.1 billion.
Mm-hmm.
That's a solid 11% increase compared to last year. And importantly, it exceeded their own expectations.
That jump, it suggests pretty strong demand for what Cisco offers. That double-digit growth indicates a healthy market for their solutions, really.
Yeah, even with broader economic uncertainties, it seems customers are prioritizing these tech infrastructure investments.
Right.
Looking at where that revenue came from, their product division led the way. $10.4 billion, that's a significant 15% increase.
15%, yeah.
And security was a standout performer, grew by a whopping 54%.
54, that's huge. Likely reflects the value people see in their integrated offerings, especially, with Splunk now folded in.
Good point. Observability also saw strong growth, 24%. Networking and collaboration delivered respectable increases, 8% and 4%.
The strength across multiple categories, particularly that explosion in security and solid networking growth, it signals a pretty diverse portfolio. It suggests Cisco isn't overly reliant on just one area for growth.
Right. And geographically, the Americas saw the biggest jump, 14% increase.
Okay.
EDA and APJC both saw growth around 8-9%.
So pretty balanced globally.
Yeah. And their services division contributed $3.8 billion, up 3%. So overall, looks like they're performing well across different parts of the world.
That balanced growth really underscores the global relevance of their solutions, reduces dependence on any single market.
Let's move on to profitability. How profitable are they?
Always the key question.
Their non-GAAP earnings per share, that's the measure excluding some one-off items, gives a clearer picture.
Right, of ongoing performance.
Came in at 96 cents. That's up 9% year over year, and again, better than they predicted.
Good beat.
Their GAAP EPS, which includes everything, was $0.62, a substantial 35% increase.
Wow, okay.
These strong profit numbers, they show they're not just making more money, but they're doing it efficiently.
Absolutely. The fact that both GAAP and non-GAAP EPS beat guidance indicates strong operational efficiency, maybe good cost management too. That non-GAAP figure really highlights the underlying profitability of their core business.
And their profit margins were healthy too. Non-GAAP gross margin, the profit after cost of goods, hit 68.6%.
A solid number.
Product margins at 67.6%, services strong at 71.3%. All above their forecasts again.
Consistently beating. Okay.
Their non-GAAP operating margin, factoring in operating expenses, was a comfortable 34.5%.
Strong margins like these, they often point to a company's ability to command, premium pricing.
Right, pricing power.
And keeping costs under control. Exceeding their own margin targets is definitely a positive indicator of business health.
Okay, now for a key indicator of future performance. Orders.
Oh, you look at the orders.
Total product orders surged. A significant 20% year over year.
20%?
Or 9% if you exclude Splunk's impact. But what's really encouraging is they saw growth across all geographical areas and all types of customers.
That suggests really broad-based demand.
Yeah.
This substantial increase in product orders is a very positive sign for future revenue. It means customers are committing, which should translate into continued momentum.
Looking closer at those orders, enterprise product orders jumped 22%. Strong double digits in the Americas and Asia Pacific.
Okay, enterprise is strong.
Public sector orders up 8%. And notably, the U.S. federal government segment showed double-digit growth after a kind of slow start to the year.
Ah, good to see federal picking up.
And the service provider and cloud segment, a massive 32% increase in orders.
32. Driven by web scale, I assume.
Driven by triple-digit growth from those web scale giants we mentioned at the start.
Wow. That just underscores Cisco's growing influence with those major cloud players, especially for AI builds.
Definitely. Even within their core networking business, product orders grew by double digits.
Still growing strong there.
Campus switching orders, the internal network gear, saw high single-digit growth.
Mm-hmm.
And incredibly, orders for their new Wi-Fi 7 tech saw triple-digit sequential growth.
Triple-digit sequential. Okay, that's taking off fast.
Yeah. Plus, their industrial IoT portfolio orders were up 35%.
So, strong, diverse demand within the core business areas, too. Networking is still foundational.
Let's talk about recurring revenue. Their annualized recurring revenue, ARR, that's like the annual value of their subscriptions.
Right. Predictable revenue.
Reached $30.6 billion. That's up 5%.
Mm-hmm.
Even better, their product ARR grew by 8%.
Product ARR growing faster. Interesting.
And subscription revenue itself jumped 15% to $7.9 billion. Now makes up a solid 56% of their total revenue.
That shift towards recurring revenue, it just provides greater stability, more predictability for future earnings. That's key for investors.
Yeah, a more resilient business model.
Exactly. Reduces reliance on those big one-time sales.
And they have a significant backlog, too. Total remaining performance obligations, or RPO.
The contract's already signed.
Right. Value of signed contracts, not yet delivered.
Yeah.
Hit $41.7 billion, up 7%. Product RPO up even higher at 10%.
Gives them good runway of future revenue. Strong RPO provides confidence in that future performance.
Okay, moving on to cash flow and how they're using their money. Operating cash flow was $4.1 billion, up 2%.
Steady cash generation.
And they're actively returning value to shareholders. This quarter alone, $3.1 billion back through dividends and share buybacks.
That's a significant return.
$1.6 billion in dividends, $1.5 billion in repurchases. They also announced their quarterly dividend, new to 41 cents per share for July.
Shows ongoing commitment to returning capital, reflects confidence in their financial strength and future cash flow.
Finally, let's look at what they're expecting for the future. Guidance.
Right, the outlook.
For Q4 fiscal 25, they're forecasting revenue between $14.5 billion and $14.7 billion, and non-GAAP EPS between $0.98.
Okay, pretty much in line with Q3 EPS.
Yeah. For the full fiscal year 2025, projecting revenue of $56.5 to $56.7 billion, and non-GAAP EPS of $3.77 to $3.59.
So maintaining that growth trajectory overall for the year.
Exactly. And it's important, they noted, this guidance takes into account the estimated impact of tariffs.
Ah, okay. Good, they factored that in.
So this outlook suggests they anticipate continued strong performance, even with those potential trade challenges.
Yeah, it indicates optimism from management about their market position and ability to execute, despite the complexities out there.
Now let's move beyond the numbers, talk about some key non-financial insights.
Mm-hmm.
And the big story here is clearly their success in AI.
Absolutely, that billion-dollar number.
Yeah, as we highlighted at the start, they've already exceeded their full-year goal for AI infrastructure orders from those massive web-scale customers, over $600 million just this last quarter.
Bringing the year-to-date well over $1 billion. That's a huge early win in a crucial growth area.
And what's really revealing about these AI orders is the breakdown. What are they actually buying?
Right, the product mix.
Over 2/3 are for their systems, powered by their own Silicon One G200 chip. The rest is optics.
So it's not just connectivity. Their core silicon tech is vital for that high-performance AI training infrastructure.
Exactly. And they mentioned demand is actually outpacing their current capacity.
That underscores the strength of their offering. They've got something the big players really need right now.
And it's not just the biggest cloud providers either. Cisco's also seeing increasing interest, orders for AI infrastructure from their enterprise customers too.
Ah, so the enterprise market is starting to unlock.
Seems like it. As businesses across sectors start deploying AI more broadly, and their partnership with NVIDIA is likely a key factor there.
Right, those strategic alliances are central. The collaboration with NVIDIA, creating that unified architecture.
Using Cisco's Silicon One and NVIDIA's networking expertise.
Yeah, that's a powerful solution. And that joint secure AI factory initiative addresses a critical need for secure AI deployments in enterprises.
Good point. Those partnerships really enhance their credibility and reach in the AI market.
Yeah.
They're also making moves globally. Announced a new investment program in Saudi Arabia, becoming a key tech partner for their new national AI company, Humane.
Interesting. Expanding their footprint.
They've also joined the AI infrastructure partnership with other big tech players focused on secure, scalable AI infrastructure. And they anticipate significant opportunities in sovereign AI clouds, dedicated AI for specific nations.
So they're positioning themselves as a global player in this whole AI ecosystem build-out, proactive approach.
Cisco is really focusing their AI strategy around three main pillars, seems like.
Okay, what are they?
One, providing that high-performance AI training infrastructure for web scale.
Right.
Two, enabling AI inference and enterprise AI clouds, like with the NVIDIA partnership.
Right.
And three, crucially, delivering the advanced network connectivity that all this AI stuff relies on.
Tying it back to their core strength. The network is fundamental.
Exactly. They're emphasizing that their networking expertise is foundational for generative AI. It's a comprehensive approach targeting different market segments.
Yeah, that three-pillar strategy gives a clear framework. Leverages their existing strengths while going after these new AI opportunities. Makes sense.
Okay, turning to innovation. They're heavily investing in security solutions tailored for this new era of agentic AI.
Security is paramount with AI.
Yeah, advancements in Cisco XDR and Splunk platforms, a new collaboration with ServiceNow to integrate security ops with their Cisco AI defense system.
ServiceNow integration, okay.
And the launch of Foundation AI, a dedicated team focused on AI security challenges.
Proactive on the security front.
They even gave a sneak peek at a prototype of their quantum network entanglement chip.
Quantum networking, wow, looking way ahead.
Hints at future possibilities in secure communication. These innovations show a strong focus on addressing the security side of AI.
Yeah, they understand that as AI gets more integrated, robust security is non-negotiable, staying ahead of future threats.
They're also using Gen AI and, interestingly, genetic systems internally to improve their own customer experience and support.
Eating their own dog food, so to speak.
Right. Over 60% of their support cases now handled or assisted by AI automation, leading to faster resolutions, fewer low-priority cases.
That not only improves efficiency, but gives them real-world experience to feed back into their products. Practical AI application.
We also saw some significant leadership changes announced.
Oh yeah, what's happening?
Their current CFO, Scott Herron, will be retiring at the end of this fiscal year.
Okay.
Mark Patterson, who's currently the Chief Strategy Officer, is taking over as the new CFO.
Strategy background moving into CFO. Interesting.
And Juju Patel has been promoted to President and Chief Product Officer, broader responsibility for product strategy.
Bigger role for Patel.
And a notable addition to their board, Kevin Weil, the Chief Product Officer of OpenAI.
OpenAI's CPO on the board. That's a big signal.
Yeah, these changes could signal a strategic shift, maybe a greater emphasis on product innovation, and, well, obviously AI.
Seems likely. Stronger focus on future growth areas, especially AI.
They also address the ongoing tariff uncertainties. China, Mexico, Canada.
Always a fact.
Their current guidance assumes existing tariffs and exemptions stay put through Q4.
Okay, so that's baked in for now.
They're mainly relying on supply chain management to mitigate the impact. Pricing adjustments are like a secondary option.
Trying to absorb it first.
Interestingly, they didn't see any significant rush in customer orders because of tariff concerns.
So demand isn't being pulled forward artificially?
Doesn't seem like it.
Yeah.
But they did note a full quarter of current tariff costs is factored into their Q4 gross margin forecast.
That explains the slight expected dip in margin despite revenue growth.
Exactly. Highlights a potential near-term headwind for profitability.
Yeah, the tariff situation is a potential drag on margins, short-term anyway. Their mitigation strategy suggests they're trying not to pass costs on immediately.
Right. And finally, they mentioned they haven't seen any meaningful changes in customer buying behavior despite macro uncertainty.
Still spending.
Seems so. Customers remain committed to tech upgrades, especially AI-related ones. And apparently, web-scale customers actually reduced their inventory levels during the quarter.
Oh, so they're actively deploying the gear they're buying.
Suggests continued deployment, yeah.
Yeah.
Indicates underlying strength in demand.
That stability in purchasing and the deployment by cloud customers, those are positive indicators. Shows confidence, especially in AI investment.
So, to quickly recap the key strengths, Cisco delivered strong Q3 results, beat expectations.
Yep. Strong quarter.
Significant momentum in AI infrastructure orders, crushed their full-year target way early.
Huge AI win.
Robust product order growth across the board regions, customer segments.
Broad-based growth.
Their innovation pipeline, especially in AI and security, is accelerating.
Future-focused.
Solid growth in recurring revenue streams.
More stable business.
Commitment to returning capital to shareholders.
Shareholder-friendly.
And key strategic partnerships in vital areas like AI.
Smart alliances.
On the other hand, the weaknesses or challenges. Potential negative impact from tariffs on Q4 gross margins. That's the main one.
Margin pressure is the thing to watch.
They also mentioned continued softness in the civilian side of U.S. public sector.
Okay, one specific weak spot.
And while networking is growing, the growth rate, it's still below levels from a couple of years ago. And the revenue from AI networking products is still early days.
Yeah, AI revenue conversion takes time.
Good.
Still building.
So bring it all together. Cisco had a very strong quarter, really driven by that exceptional AI demand and their innovation focus.
Definitely strong momentum.
They are, however, navigating those potential margin pressures from tariffs near term, and we're seeing strategic leadership changes as they evolve.
Positioning themselves for the AI era and ongoing digital transformation.
This leads us to a final thought for you, the listener, to consider. With Cisco's early success in this high-stakes AI infrastructure game and their expanding strategy for enterprise AI, how might their role in the broader tech landscape shift?
Good question. As AI becomes even more fundamental across all industries and all sizes of organizations.
Right. What new challenges and maybe unexpected opportunities could this present for Cisco and for the diverse customers they serve?
Something to ponder as this AI wave continues to build.
Cisco is scheduled to hold their next earnings call. That'll be for Q4 and the full fiscal year 2025 on Wednesday, August 13, 2025.
Thank you for joining us for this in-depth look into Cisco's latest earnings.
We trust this deep dive has given you a clear and valuable understanding of their performance and outlook.